Hello, 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 everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino, who should be here this afternoon. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer-term viewers and subscribers, please like and comment on the videos. So, how is everyone doing today? Let's see who's here. Morning, Wavy. Yes, last day of the month. We will check in on the 210s, but it's already been inverted, and that's really what matters technically, but we will check in on it because it's a fun thing to do. Good morning. Hope the weather's starting to warm up north for you. Well, yesterday was a little warmer, but today is cold and rainy with chance of snow. Hey, Ken. Hope everyone is well. So, we already had what the big thing is, the PCE price index coming in a little better than expected, but that's sort of core just by zero point 0.1, but that's still ridiculously high. And this is before all the Ukraine invasion. PCE price index year over year, 6.4. That is ridiculously high. Initial job claims slightly higher. Price index coming in slightly higher than the revised one. Personal income is at 0.5. Personal spending at 0.2. That is a big miss. But what did the market do? Well, we'll check on that in a moment. Until then, still we're at 66.6 on the 50% basis hike, and we're still gamma foot 45.48, so 45.50. So that's about a little lower than where we are now. Let's switch over to the other cameras. There we go. Hide stuff for a second. There you go. Pretty much not much going on so far. Inside day yesterday, so far inside day today. Now let me show you again. We talked about, I'll go through a few things. Why do I have these up? Because we actually, off this potential bonding bar, triggered, could not go on a 4-hour basis, not above the 62.5 you see here rolling over, making this little double and hitting the first and second target. So on a breakdown lower, by the way, that triggered the stop for that 4-hour aggressive buy has to be below the low of that bar. There is no tighter stop you can use. I guess you could use a 62.5 of that bar if you really want to get hyper aggressive, but that lowers your probabilities. First, second targets hit. I'm just watching either on a breakdown in the morning. I'm watching for 45.87 and find partial support there. If we don't find partial support there, it would be yesterday's lows. To the upside, again, the 4-hour triggered already. We're still in the rotation zone. So upside, I'm really going to start focusing on it above 46.10. And then above that, a retest of the yesterday high area, 46.26 to 46.30. If you want to do your intermediate levels with this pause, you have a really good way to do the harmonics. But look at that. It just takes you to 87.5. So once we get the close above this 62.5, I'm focused on that 87.5 right there. Just wanted to point that out to everybody. Now I'm going to declutter a little of my charts. Bigger picture, remember when you have an inside bar, I also start focusing on yesterday's key high and low. So if we break down even further, yesterday's key low is really important. That's would be the stop on that 4-hour aggressive buy out of the rotation zone. And on that rally, it's up by yesterday's high, which we've already identified. So keep that in mind above there. If it has a stronger rally, 46.38, 46.45. So again, it's month end. NASDAQ just sitting with another inside bar today. No real great patterns here. The aggressive buy, again, this was a different pattern. This was a percent B that not triggered. No 4-hour close above it yet. So still watching this. It's technically off by this number of bars, but still going to technically watch for what gets me bullish in the NASDAQ is a close above about 15,170, and that can even be on a shorter term basis now. Longer term, I'm still, if we sell off into the open, watching yesterday's key low because that inside bar day. If we break down below that, if we have a bigger sell off, I'm going to 14,855. I didn't cover a bigger sell off on the S&P, would be down to 45, 46, 45, 50 area, which would be take the gamma right back to neutral. NASDAQ to the upside. Sorry, I messed up on that. NASDAQ to the upside above that 62.5. I'm just watching this about 15,245 to 15,268. And then above that, here's where if this, as long as this doesn't make a new low, these levels work. 15,375 and then major clustered at 15,334. Funny how this all works out. Remember, that's a 62.5 from this whole down to back up move, 62.5, and now you have a little mini harmonic cluster there. I just find that funny how these things work out. I'll get to questions in a second. Dow also inside, and yesterday was an inside bar, so this is getting a little repetitive, but yesterday's low, first focus, and then we break below there. Support coming in about 34,800. First key level support. Below there would really be right around this 34,684 to 34,606. The upside, to the upside, focusing on about 35,238, then 35,281. Again, you can do reverse harmonics here. If you want the shorter term levels, I'm just watching these longer term levels, but if you want the shorter term levels, you just jump back there. My next major cluster is 35,414 to 35,448. Russell, again, still basing at the breakout level, but I'm really not doing with anything with this. If we break down 2051, if we rally back up 2134. DAX holding this key support, but if it does dip in here, and this isn't just necessary for today, if it breaks the midpoint of this horizontal channel, I'm watching for a return to the other side. Crude, and this is why I've talked about why you always, no matter what, know where your stops are. Because could I have known that they were going to do another strategic petroleum reserve release, which is absolutely ridiculous at this point? They're talking like 31%, which is asinine. And that's not because I could care less that a trade gets stopped out. I'm just saying that that's a horribly strategically bad decision from my perspective. But this is why. Look, you had the Head and Shoulders trigger, and then they announced after, what was it? Early evening last night, SPR release. There we go. But now what does it have it set up? So that's why you always know where your stops are, and you take your stops. You take your stops, because I'm just going to keep tying this in, especially in these markets. You can't be right on every trade. It's just not possible. So you need to know where it is. That's how you're in the game for the long term. Now, then you can't also say, all right, I mean, you can do anything you want because it's your account, it's your money. 103.39 above here, we do have a potential 1 hour double. Then this is where people get in trouble. I just took a stop in my last trade. I'm going to skip this one. Well, if it's a high probability trade, do you skip it? That's where you get in that trouble I talked about before, where you start skipping, you start, oh, well, that last one didn't work. This one probably won't work. Well, they're still doing the petroleum release. This hasn't even triggered yet. So it's just still a potential double. It could roll over again. We're against the 1 hour rotation zone. But if it does pop up, it's back to 106.25. And those are just small short-term trades. They're not in the macro. It doesn't change anything in the macro. We're getting into a bigger consolidation pattern. And now it looks like almost my favorite pattern everyone knows. But I might as well put it on here. My favorite, and I'm being facetious, favorite pattern triangle. There we go. Gold, pretty much flat. A little trying to rotate back up. It's still in consolidation. Silver, again, from my perspective, pretty much flat. Going to watch for a retest if it does bounce up to about, right now, about 25.75. This level doesn't matter anymore. Notes, we had that double that triggered, pulled back to the peak breakout area between the candle bodies and the peak, rotation up. So first target hit, second target hit, even pullback. I'm just going to be watching the 4 hour rotation zone. Final target about 123.09. Dollar index still holding this key support. If it does roll over, we could see some momentum to the downside if this level finally breaks. VIX, even with this little pause, there's just nothing. This is just a pausing area. I'll start getting interested if the VIX can get above 21 again at this point. Let's see where we sit. Let's see. Good morning. Good morning, Ramsey Fall. Good morning, Sterling. Was trading that crude drop last night, made for great short side scalps. Well, that's good. Yeah, from just a scalping aspect, that was fine. Biden says releasing 1 barrel of oil today. Strategic reverse. Crude sold off massively last night. Thoughts on grow? I already went through that. Yeah, I already went through that. I'm just watching for that double to trigger. Without any hesitation. Yeah, and that's, again, it's still in a range. I'm watching for the bigger pattern, but that 1 hour double is definitely playable. Options, your opinion on, and nothing more. So for a day trade, your opinion, QQQ or Apple? Push the Qs, don't need to push heavy weighted. Let's check in. We got the Qs, but again, I'm watching again on the futures. If the futures break out, I don't really trade the Qs. I watch the futures. Again, if you're watching this, if you start breaking above the 371 area on the Qs, that's the little trade to the upside, and below about 365.50 is a little trade to the downside. I just play their breakdown or breakdown play, but I'd really focus on the futures. And Apple, again, it's a challenge with this is we're in month end, and it looks like toppy, but Apple, you still have a gap play to the downside. Now to the upside, really you start getting above about 178.20 could be an interesting upside play out of the 1 hour rotation zone. To the downside, you break below 176, this key little ledge in here, and I wouldn't, then it's gonna retest that gap most likely. I mean, the probabilities would be there for the gap fill play. Let's just see where that 62. See, it still hasn't, even with this, we still don't have that a major close below this, and we got the rotation zone right there. So if it does start rolling over even below about 176.65, that could be a little gap fill play. The markets aren't really reacting to the PCE number. If we go back to that NASDAQ, I mean, this is still, we're just going to have to see off the open. So NASDAQ, if you're just watching the futures around, you could, even about 15,000, you start breaking below there. You could then we're going to watch for a breakdown play, and we could end up very choppy markets end of month. We've already rallied substantially. I have to judge everything off the open today with this tactical nature of trading, since we got very little reaction at the with the PCE numbers. Potential double bottom staying up on the 4 hour, and I already covered it on the 1 hour with crude, and you can even watch it on the 4 hour. Here's your 4 hour. And here's that 1 hour. I really like the 1 hour with the, above here, even on a short-term break. If we get some momentum, a pullback area, I'm going to watch for that one. Let's see. Good morning on it. Good morning, Lauren. Yeah, I'm glad you like the sessions. Yeah, that feedback's very helpful. Thank you for reiterating that comment. Hard to trade oil these days. Every day is new headlines. Yeah, it's still tradable. Still tradable, but those are the markets we're in. Except for the stocks just seem to be in their own la-la land, not trading off any headlines at the moment. They're just trading off end of month and quarter month. But I think starting by next week, next Monday, they'll start trading off headlines again. Kyle Bass, Heyman kept said something interesting this morning. There we go. Last two spikes in oil. Each time China announced a COVID shutdown. Coincidence? No, I mean, oil traders will trade off shutdowns because of but it's, again, those are just little micro trades within a macro picture. Now, keep in mind, macro picture for crude, the macro picture for crude, we're in a consolidation pattern still with a rising rotation zone. So can we sit? Remember, we were massively overbought on the weekly. Okay, we got a no divergence there, no divergence there, but we could not get that move and close on the daily back above the 62.5. So can we be burning off the overbought condition with a bigger sideways move? Completely. So could we remain a little choppy back and forth and just trade within that chop, which is what this little double really is a trade within the chop? Yeah. But overall, for me to get really bullish longer term, I need the daily close back above 116.65 area. And what would get me back to a little more bearish mode, even on a pullback now, 92 is your base. And we haven't even dipped back into the horizontal channel that it broke out of. So again, this is just still in longer term bullish plays, shorter term, medium term consolidating, but I can't get short term really bullish until we get above that 62.5. Is that a sloppy 1 hour double on Apple? Didn't get down to that time frame. We can take a look. Yeah, that is. That is a... And look... Look at the target. Now, you got the rotation zone right in the way right there, and you're going against the 4-hour rotation zone, so is that a higher probability double? No. But it is a little double, so if you do break down, your final target is virtually the gap fill. Thanks for pointing that out. I normally don't get to the 1 hour on stocks. NAS should retest the 50% fib. On which time frame, Rich? And which move? The 50% fib here? I think it will, whether it does it today. And the 50% fib of here, that's the rise in daily rotation zone. I agree. Whether it does it today or not, who knows? Again, it's the end of month. The end of months and end of quarters get tricky to trade. So, yes, if you start seeing momentum, that's the next target down, which would just be a reset with the daily rotation zone. Completely agree. DBC, is this a gap fill player looking for lower prices? On again, which DBC commodity index, I'm still watching for potential lower prices, but I'm, already have it's just for me to add back into more commodities. Am I going to short anything here? No. And you have multiple gaps. DBC, you have a little a gap here, you have a gap here. So it's really just a breakout or breakdown play short term. But again, I'm not shorting commodities. I'm watching commodities for pullback plays. For example, in grains, I'm watching those specifically for pullback plays right now. What would get me a little more concerned, at least in the short term, is you almost have a double right here. So then I'd start watching for an even bigger pullback and I'd get less aggressive with buys. I'm glad you're finding great plays in this madness. Let's just realize that the oil that's leaving the strategic reserves will have to be replaced. Yes, it will. This is purely political. We'll have to replace oil, which will push oil back up. And what if oil stays at a plateau for a while? And this isn't going to do crap. It's just a complete political play. I completely agree with you. And it's not going to do crap for long-term gas prices. It's actually putting us in a worse oil position strategically. There's a reason it's called strategic oil reserves. It's strategic is not to try to push down gas prices in the short term or manipulate the market. That's where it will get real interesting, because if oil stays resilient, there's a strong bid under there. There you go. Yes, thank you, Michael, for the that 1 hour double top. It is still that breakdown play. It's just lower probability. 15-minute double top triggered on Tesla. Again, I'm mainly focused on some longer term plays, this being month end, but let's see if that was even valid. We'll go with conservative targets. No, see, I can't. That's was not valid for me because I guess you nope. Second and third targets aren't in there. So that was just a top formation with a breakdown. That was not a double top. For my rules, you can have different rules. Those are for my rules. Because the probabilities drop that it can't get to the second and third targets. Can Tesla still roll over? Sure. I mean, I'll get to the Tesla analysis. It's in a horizontal corrective channel, trying to burn off its overbought condition by just moving sideways. So if it starts dropping this morning below about 1082, see, this is where it gets challenging. Then your next level is about 1073 to watch for some support. I don't really start getting bearish until we get below this 1053 area and focusing on the gap fill. Other than that, it's just trailing. Now, if you have a very short-term position, you have to keep a tighter stop. If you have a longer-term position, you have a wider stop, especially if you've already taken off profits. And that's my bigger thing, that gap fill. That will be the next corrective play. All right, yes. Again, great community here. Thanks for pointing stuff out to each other. Let's just peek back in. That's why we have the community, and that's why you have the Discord server. Working on some new thoughts for the Discord server, so just keep that up. Again, let's just see where we sit. Nothing really new going into the open. Let me just check this now. This is why I measure everything out. This is why I measure everything out. Was that a valid play? That's interesting. Yeah, this is completely valid. So my new level I'm watching off the open for any bullish case is 4603. This is, see how this goes into these candle bodies, so it is completely valid. Now there's still a big flat area here, which is fine. But I'm going to be watching that to the upside. We break below to the downside here. Again, if you want your tighter level from if you're long and worried, I can't say worried about, but here's your key thing. If it starts breaking below on a longer term closing basis, about 45.89, but you have your 4 hour right there, which is at a harmonic 45.84. I would not have any bullish stops in front of 45.84, educational purposes only. So that's where we sit. I'm gonna now go prep for the open. I got 3 minutes left. Thank you for being here, and we will see how the market did on our afternoon wrap up today for quarter and month end. And please join me for that. We can review anything we want to review. So bye for now. Have a great day trading.